Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. The first thing I noticed, my OCD is going crazy. Let me realign this. All right. Hopefully, everybody's doing well. Happy Thursday. Let's dive in, jump into kind of the today. I ended up taking no trades. I kind of missed the shorts today, but I want to dive into kind of the entry, what I was looking for, what I ended up missed, what we did right, what we did wrong, any trades that you guys took today. I know a lot of you guys probably caught this to the downside from that 5-minute imbalance. But let's jump in. We'll talk a little bit about that, and then, of course, what we're looking at going into the rest of the week as well, or going into Friday, I should say. So going into the day, again, very bearish bias. Pretty much today ended up playing out exactly how I wanted it to, which was Thursday put in the high manipulation, just pretty much sell off the entire day to go run all of this low resistance. The daily volume imbalance continued to hold bearish. Bigger time frame SMT was still holding bearish as well. I was looking to see displacement and see a change in the state of delivery, which we ended up getting. Pulled back one time pretty much into this 5-minute fair value gap and just pretty much just straight up dumped all the way to these lows and now continuing towards these lows here. Now, I would want to see a continuation going into tomorrow, which we'll get into in a little bit. And I want to see that go towards this daily imbalance since right now we're kind of closed below this one. So I'd like to see price continue lower and finish out this bigger time frame market maker sell model on the 4-hour. This was the change in the state of delivery on the 4-hour. I wasn't really expecting us to just have this kind of massive of a just dump today. It made sense though. The only really entry here, in my opinion, was kind of two things. The main one would be this 5-minute fair value gap. Now, the reason I didn't take this 5-minute fair value gap is because I wanted to see the internal model just so I could adjust my risk. And I think there's kind of two ways to go about it, and it really depends on who you are as a trader. For me, I want to be able to align the internal model so I can get the best risk possible and take advantage of the move without putting on much risk, right? If I'm going to enter short here, my stop loss, like a tight stop loss on this would be this high, right? I would have to put it to this high, which is the wick of the 5-minute fair value gap, right? And this is still great risk. Like, this is a fine trade, 3.25 RR, like totally fine. But you're not taking anything. You can't scale here, and since you're on the bigger time frame, you have to have more discipline. This is more so of a literally just set and forget, sell, come back to the market later, and see how this ends up playing out. Or you wait for the internal model, which, in my opinion, we never ended up getting. I would have wanted to see this become turtle soup high, getting ran through. So kind of something that I want to talk about today is a lot of the times there's going to be trades like this when you're looking for that specific entry, and then it ends up running, and then you start questioning, okay, did I do it right or did I do it wrong? And that's kind of what I want to talk about tonight when it comes to finding what that decision looks like. Number one, today, for me, the most clearest thing I wanted to see was a change in the state of delivery on the 4-hour. This low gave me the clear understanding that we would have a change in the state and we would go run all of these lows, right? Now, I needed a 4-hour close. This candle ended up dumping, and now the 4-hour close is here, right? So now there's kind of really not anything. Now, there still could be opportunity, pull back, and then we'll catch the rest of this model. I'm not saying that. But I'm saying this initial candle move. The initial really entry here was the 5-minute fair value gap. And then on the 1-minute, this morning, when price ended up coming up, we took these little relative equal highs, put in a small SMT, and then this fair value gap gets ran through and it becomes an inverse fair value gap. This would become the second short, in my opinion, or the first short, and then this would become the second short. But a lot of the times, if you were to take a lot of entries before this too, like if you were looking at the previous days, you're easily going to get chopped up. And that's kind of why weekly profile is so important as well, because Thursday high gets taken. Oh, that's not what I want to do. And we're looking for an entry to go target all of the existing sell side we've been looking to see get taken, right? We know all of this generated sell sides here. We're looking for when it's going to get taken. So we finally get changed in the state of delivery. My problem and kind of what I'm taking away from today is there's kind of two main ways to go about this, right? When we talk about either taking the trade or not taking the trade, or figuring out, did I do this right? Did I do it wrong, for being more picky, right? One thing that I'm going to take into kind of the rest of this challenge account is when a trade looks good, but the risk is wide, cut your risk and whatever your max risk is in half or a third, and then scale if it's given. And what I mean by that is there's two ways to go about it. Let's say I take this short and I put my stop here. And let's say my max risk, like if I'm on, it depends on who you are, but let's say my max risk on this account, right, is $300. So I adjust my contract size and I say, okay, 3 contracts, $300. I'm going to enter 3 contracts here, have a wide stop here, right? For me, I want to see a lot more structure here. I wasn't super confident taking this 5-minute fair value gap because I wanted to see what the bigger time frame was going to look like too. But I did have confidence that we were going to put in a sell high and we were going to go run all this sell side. So there really wasn't reason for me to not take this. It was just more so the wider stop that kind of kept me away from this trade, even though I could have just, again, adjusted my risk and it still would have been fine. Or I take this initial setup with lower risk, depending on the confidence that I have with it. So let's say I take 2 contracts instead. I put on $200 risk. And then if a internal model appears, I can add to it. Now, or you can just enter your 3 contracts, accept the initial risk depending on how confident you are on the setup, and then add even more, and then continue to adjust your risk. So the kind of the pyramiding scheme of what I would want to do, like the best case scenario would be this, right? You're looking at this 5-minute fair value gap. Let's say you take an initial entry in the imbalance. Your stop becomes up here, right? And your initial risk here is, let's say, $355. So let's bring this over. Let's say price was to come up and go take this recent high. Let's say price came up today. Took this recent high, displaced, right, and had an internal model. And let's say there was maybe even an SMT here, right, whatever. My first initial risk is 355, right? Oh, come on. 355. I now add to this position when the internal model shows itself. So now I'm pretty much, in this example, pretty much entering like at the exact same fill. So my fill's probably the same. But now let's say I'm in 5 contracts or 6 contracts, and I'm risking pretty much the exact same. So the difference in between these is I scale in, right? It's all about managing risk and being able to maximize your wins. My initial scale in entry, and I'm putting my stop here, and I'm accepting whatever the initial risk is. In this case, it's 355. I then wait for the internal model, and I then add to this position, and I move my stop. I add double the position. Keep in mind what the PT looks like here. 3 contracts is $1,000. Stop loss is 355. Internal model, I add 3 more. My fill now becomes 6. I now add $20 worth of risk and an extra $1,000 of take profit, right? So you're doubling your take profit and adding literally pretty much nothing to your risk. So that's kind of the best way that that's kind of the main thing that I wanted to see go about this setup. But the problem is I should have just entered this, because the good thing about entering this is you'll still take advantage of the setup even if the internal model doesn't present itself. So there's kind of like this back and forth that like a lot of us traders go through, where it's like, okay, do I take, do I wait for extra confirmation? Do I wait for a turtle soup? Do I wait for this? I think when it's clear, and you should enter something. Because you can always, number 1, take off your position. Number 2, add to your position if there's extra confluence. Or number 2, you just accept whatever risk is on the table. If it looks good, it looks good. And I think a lot of the times us traders get so involved or scared on the bigger time frames, right? Like for me, I like trading more on the lower time frames, entering on the 1 minute from the 5-minute model. This is a beautiful 5-minute model. We get displacement through this low, pull back to a 5-minute fair value gap. But we get scared because it's like, okay, that's 55 or 60 points of risk, whatever. Just adjust your contract size, right? Know your max loss, adjust your contract size, and just have more patience, right? And these are the kind of trades, in my opinion, that it's best. If you're taking a trade on a 5-minute or a 15-minute, I think it's best for you to just simply enter and walk away. Because the difference between trading on a 1-minute versus a 5-minute and 15-minute is a 1-minute needs more management, right? There's a lot more management that needs to go on a 1-minute than a 5-minute and a 15-minute. So if you see if you see a model like this on a bigger time frame and you're confident with it, scale into a position, right? Either decide what your risk is going to be, or if you want to wait for more confirmation, then scale into, let's say, a third of the position. And if an opportunity presents itself where there is an internal model and you can scale in and add to the position, then do so. And if there's not, that's fine. You either take the small loss or you take the win, right? And that's kind of how we want to frame ourselves. And that's just how we need to think, right? Every single trade you should take should either be small win, small loss, or big win. That's it. There's no big loss in there, because this has to do with understanding risk, understanding, positioning yourself in a model, right? Because a lot of the time we always talk about like a model, but how do you actually position yourself within the idea of how we're trading these strategies, right? And I think this today is a great opportunity to really dive into that idea of like, okay, there's a lot of different ways you can position yourself. And it also really depends on your personal conviction that you have with the specific entry model, right? I know Morpheus took short up here, right, early on. He has conviction for that. Some people have to wait for this placement and then enter here. Some people don't even have for this and they want to wait for that, right? All of this is learning opportunities for you specifically to be able to look at this and say, what am I struggling with? Am I the guy who's entering too early? Am I the guy who's waiting way too late? Am I the guy who's entering early but not enough size or too much size, right? Like our goal is to figure out which one of those is you, and then how can we use the ideologies of like flipping perspective of it to dial in what is the best for you? Because it's like if one thing, one way to do something isn't necessarily the best way to do it, right? And it depends on who you are as a trader. So like I love having these conversations and I love like analyzing days like this because I didn't take a trade today, right? I'm in the category where I kind of, waited for too much things, and I had some other stuff I had to step away from the charts, and I didn't actually really get to see anything later on. But like when this happened, I didn't take a short, right? I was looking for more confirmation and I ended up missing out. Now, there's not that there's anything wrong with that, right? If we were to go into the market and I was to sit here and say, I'm so pissed, I should have taken the short. It was so clear, blah, 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 blah. That all that's doing is programming myself to take more trades, right? Like I'm here to learn and understand, okay, this is where you go wrong. This is a perspective that we can shift. Okay, how could I have maybe positioned myself differently? This looked good, right? Why didn't I feel like I had the confidence to take it? What was I looking for? Was this actually what I looked for and I was just being too picky, right? All of these things, and asking these questions is what actually brings growth, right? When you take the time and you actually think about how you think in the moment, how are you reacting to the ideas? Did you have confidence and you were afraid to take it because of the risk you're putting on, right? All of these things and questions we ask are so important when it comes to getting past either break even to profitable, because a lot of the time, the gap between break even to profitable is just not enough analysis. It's not enough journaling. It's not enough self-questions. It's not enough understanding of yourself as a trader. And so that's kind of our goal when we come on these sessions. A lot of the time, is just to ask yourself some questions. Like, I want you guys to really like think about things that you normally don't think about, right? So does anybody have any questions on that so far? How many of you guys took that trade? How many of you guys did not take that trade? And if you did not, was it because it wasn't your model? Were you looking for being too picky? Did you wait for, a soup entry? What was it? And if you did take it, what was your positioning on it? The inverse model presented itself to me, and I had everything I needed to take it based on my confidence in the model and requirements I look for, but not everyone has the same entry model. Don't be discouraged if you see people hitting trades that didn't offer you an entry, the same entry models. Don't get discouraged if you see people hitting didn't offer you an entry model. Like, there will always be more trades, and everyone sees the market through their own eyes and builds confidence in their own habits. 100%. 100%. Up 1,500 on new accounts. Nice. I took it, but I got out way too early. Need to stop being scared. Big thing I can recommend for that, especially on trades like this, which is on like the 5 minute, and you kind of got to sit there for a little bit longer, is just set your PTs and set your SL, set your TP, and you just walk away, right? All of this low resistance, right? And it's also building confidence. Like a big thing about letting winners run, right? A big thing about letting winners run just has to do with the confidence of seeing it happen a lot of times. Like when you can see this on a bigger time frame and like this SMT and all this low resistance liquidity, like this is going to go quick, right? Like all of this shit's going to get ran through. And like once you see it so often, you have the confidence to do so, right? If you get like your initial rejection and you're like, okay, this looks good. My stop loss is in place. My PT's in place. And if you know that you struggle with that problem of taking profits too early, try setting your stop on PT and see how your performance changes, right? Like just accept your risk, whatever it is when you first put on, enter the trade, set your stuff and walk away, and then wait till you get a notification. I think that's the best way to go about it. Took it but got out early with the low-hanging fruit, then got back in, but did miss out on some of it. There's nothing wrong with scaling at low-hanging fruit, right? But I think the low-hanging fruit, like, I don't think any of this is low-hanging fruit. I think this should be your low-hanging fruit because this is what we should be confident in. This low should be what we're confident in because this is the internal model in the 15-minute. Thursday weekly profile, like a high gets put in, and we displace through the low. Notice here how we have no displacement through a swing low. Swing low, wicks. Swing low, wicks, right? There's no structure. It's just chop, 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 chop to then generate another high. And then what does this become on a bigger time frame, right? Did you notice this? This becomes a 3 drive. 1, 2, 3. So we have a 3 drive at the high. 1 drive higher, 2 drive, 3 drive. SMT on the bigger time frame still holds. We then wick the daily volume imbalance, right? Then we get a change in the state, market structure shift. We pull back, and then we sell. After continuing to generate sell-side liquidity. Just being a little bit too picky, H. I feel like I've been being too picky lately. Not that I don't trust the model, but I feel like I'm looking too much for confluence advice. Yeah, no, I think this last week, I definitely have been doing the same thing. One thing that I tell myself is when the market isn't giving us opportunity, like high quality opportunity, right? I would say that this was probably the best setup so far this week, in my opinion. When the market isn't in a season, and you guys got to understand too, like we're coming off of the summer months. The summer months are always slow, right? Even though this slow hasn't even been pretty bad, it's just been summer months, right? And when we're in a series in a period of time where you're not constantly getting high quality opportunity like other seasons, we start to question if it's us or if it's the market. And so that's where a level of conviction, and that's why like the idea of striving versus arriving, when you strive and you're in a season like that, you go down the rabbit hole because you are like, oh my God, I'm taking so many losses. What's going on? Because you're trying so hard to trade and you're not realizing that, hey, it's literally just the market not giving you good opportunity. And you don't have the confidence in yourself to say, hey, it's just the market not giving me good opportunity. It's you just taking stuff because you want to take stuff. And then you start questioning, am I being too picky, or is it just the market not giving me a good quality opportunity? And when you get to that point, you have to take a step back. You have to look at your journal. You have to say, okay, I'm going to look at the last like couple weeks I've been trading. What are like the common denominators here? Okay, I feel like I'm too picky. Okay, let's look at the trades that I've taken, and let's start to contrast and compare and go back and see how much conviction you have now looking back at those setups versus you did when you traded them and when you journaled them, because that's something that you should be journaling, right? If you take a trade today, if you took this trade in your journal, it should have said, I had this amount of conviction, I had this, I saw this, or I didn't see this and I shouldn't have taken this. Like all of that is extremely important, because what happens is when you go back in your journal and you then look at those ideas, you can then say, was this something I actually believed, or was this a spur of the moment? And then you can look back and say, okay, I've been being too picky. It seems like all of these other trades that I've been taking in my journal really aren't that good. Like even when you think you're picky right now, you're going to go back and look at the trades and you're going to be like, yeah, that's a shit setup. I don't know why I took that, right? So it's understanding, number one, trust yourself. A lot of you guys know what you're looking for. Like I'm just going to say it. A lot of you guys get so up in your head, you know what you're looking for. When you see it, you execute on it, and that's just simple. Like you've done it before, right? And you don't tweak yourself out, right? Like don't stoop so low where you need to fall off a cliff and like start at square one right now. You know what you're looking for, so relax, right? Step 2 is just now looking at your journal and noticing the times in which you are picky. In the times in which you are picky, what are you missing, right? Is it the initial tap of the imbalance, right? Are you waiting for a soup? Are you waiting for extra displacement, right? Notice the common denominators. For me, a lot of the times I'm waiting for soup. So, for example, I missed this setup because I'm waiting for soup, meaning I'm waiting for this internal model to play out, meaning this initial high that gets tapped in the 5-minute fair value gap, I want to see price come up, take this, and then displace. Because the reason why I wait for this is because I know I can get better risk, right? I can take this trade, and then I can move my stop here, and then instead of my 3.5 RR, it now turns into an 8 RR, right? So like, this is what I'm looking for. But there's different ways to go about this. You can still look for this, but you can also still take this trade, right? Like neither one of these are wrong, right? And that's what you have to recognize. It's like you're not wrong. It's just preference, right? Either one of these is good if the model is good. It comes down to the model, the entry model, and the system that it takes to actually enter and like manage the trade. It all is different. That is where the difference comes in, right? We all trade the same concepts. We all most of the time are looking for the same things, right? 95% of the time. What's different is how we manage a trade, where we're entering, where we exit, are we scaling out, right? All of these things are based off of personal preference, and that's something that just comes with time. So like, for example, a lot of the time when it comes to being picky, the biggest recommendation, this is something that I'm taking out of today that I want to use into next week and focus on, and that I wrote in my journal, is like, if something looks good and you are confident in the initial model, but you are not confident in where price is exactly going to reject. For example, what I mean by this is like, I think we're going to reject this fair value gap, come back down, but I'm not sure we're just going to tap this and dump. So I don't want to have this big a stock because I know we could still go higher, right? So what I do is say, hey, I think we can still go higher, but I like the model. So I'm going to risk small so I can start building conviction with it, right? So looking back, you now go, hey, this looks good. I'm going to enter this with small size. Let's say your max risk is 300, like we just said. You can then do one contract and risk 100, or then do two contracts and risk 200, right? But don't risk your full size, because right now your goal is just building conviction on the scaling part of it, right? Which is pyramiding into an entry, getting comfortable with taking the first entry and then looking if there's a second entry after a stop rate or another SMT, right? Whatever it is, because the more data that's supplied to you with the trade, the more confidence you're going to have, right? And that's something we have to think about. It's like trading is a data-based game. The more data that is given to you every single second of the market, the more conviction that will either form or take away, right? So like we could tap this, initially sell off, come back up, right? And then do something like this, and then maybe an SMT forms right here. It's like, okay, I have a lot more conviction in shorts here than I did in my initial entry, right? And like, I don't know that's going to happen until the data shows me that, like in the moment, right? And that's why we always say we're observers. We're not predictors. We are observers, because I have no idea this is going to happen until it happens. But when it does happen, it adds a shit ton more conviction to my model, and I can now scale into a position, right? I can add to my position. So it's not like a necessarily a good or a bad thing to just only take this or only take this. But if you only take this, it's obviously you're obviously gonna miss out on a lot more setups, right? So it's like it's contrasting and going back and forth and saying, what do you want? Like, if you want to take more trades, I would say practice scaling in this and just taking trades that you're confident in, but not extremely confident. And when it comes to the risk side of it, right? When you have a looser stop, lower your size, have a looser stop. And if the opportunity comes for you to scale into it, scale into it. If it doesn't, don't. That's my advice. Hopefully that answered your question. Justin, I think tomorrow I'm going to join and put you on mute, because I'm seeing when I trade mostly on days you're not live, I'm more profitable than days you are live. So I'm going to test that idea. Do it 100%. And I always recommend this. Guys, you should not be trading with me every single day. I honestly, I feel like I'm doing a disservice to everybody trading every single day of the week, just because we're in the process of getting a new analyst and I want to make people happy, but I genuinely do not want to trade every single day of the week. It doesn't matter if you think I'm providing you value. I'm providing you value by not trading every single day of the week. Because if I traded every single day of the week, you would never build personal conviction, and you would literally never grow. That's just how it is. And you might think that's what you want, but that's really not what you want. You want consistent profitability, and you want to build conviction on your own trading model. You cannot do that if you watch me trade and somebody else every single day. I am here to guide you. I am here to mentor you. I'm here to answer questions. I'm here to help you. I'm not here to spoon feed you and and be your little your little fucking babysitter, right? I'm here to push you and make you successful. And that's not going to happen when you're clinging on to me like a little baby bird and you won't jump from the nest, right? You have to go out on your own. You have to build personal conviction on your own sometimes and split the week up. Some of the days you come to me and we trade together, and some of the days when you're feeling more confident, you go and trade on your own, right? You need to have that balance. Yes, sir, Uno. Create rules for yourself and follow them. You must trust your model. I know I say this all the time, but we can never hit every trade with 100% accuracy. Not a single person can. We just make ourselves available for whatever opportunity the market shows us at any given moment. Apply our system to that model that we are seeing and setting up with 100% accuracy, meaning always following our rules, restraints, disciplines, etc. every single day, rinse and repeat. The market prints info, we interpret and apply our system. Sometimes the market prints more info minutes later that shows you were wrong. That's okay because our system is in place to protect us. Got to be 100% accurate in applying your system. Boom. That's huge, bro. 100% accurate in applying your system. Love it. James is cooking. All right, let's jump in and talk a little bit about what we're looking at going into tomorrow. So obviously, my bias going into tomorrow is a continuation to the downside. I still want to see the daily fair value gap get rebalanced too. Right now, the other daily fair value gap, let me take these little rings off. Right now, the other daily fair value gap is in the process of getting ran through. This is a more so premium array. We kind of have just a big like little breaker here because we want to kind of zoom out and see what this looks like. Again, this SMT has a lot of room to continue over to this daily fair value gap. I want to see us start to roll over. So going into tomorrow, what I would want to see, and if I'm being completely honest, there's a very likely chance that we take this in the overnight session. There's just a very likely chance that we do that. I hope we don't, but it's a very likely chance that we do. Secondly, there's no real imbalance here except for the 30-minute, but it really doesn't make sense for us to go all the way back to this. If I'm being completely honest, this is pretty much, in my opinion, how the overnight session is going to play out. It's going to look something like this, where we just kind of slowly do something here, take some sort of high, and then like sell off going into tomorrow and like trickle down, and then we probably open down here, and then the overnight session we probably go take this, and then New York Open probably opens down here. If I'm being completely honest, that's probably what's going to happen. If that's the case and market opens and we are in this daily fair value gap, I want to see how price prints. If we do open and there's not enough structure here yet, I'm going to be patient to see, okay, maybe SMT. I'd like to see displacement back up inside this range. Is there any opportunity or buy side that we created in the overnight session, right? Something like this. Is there any equal highs that we created in the overnight session that we could possibly target from bouncing this? Or we're looking for manipulation. Are there any SMTs here, right? What did we create? Blah, 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 blah. Any imbalances that didn't get tapped back into, and so on. So, but we'll see. We'll kind of see what happens in the overnight session. Any questions? Look at these beasts of a trader you're creating. Dude, I'm telling you, there's literally no better traders in the entire trading space except the people that come out of TT. Where we are not fucking playing around over here. We are actually building some monsters. Yeah, so Powell speaks at, what time does Powell speak tomorrow? $10 a.m. Ooh, okay, so that'll be interesting. So we'll trade in the morning. Powell speaks at 10 a.m., 9:50 macro, 10 a.m. reversal. That'll be actually super interesting. I'm excited. Could get some nice opportunity there. I feel like I'm far enough into ICT. I'm almost done with the coursework, but I'm confused on what model and system is. I understand it combines higher probability, higher time frame drawn liquidity, lower time frame drawn liquidity, delivery, speed, displacement, discretion and experience, and also SOUP, PD arrays, SMT, and context profile, but like whole use of system and model confuses me so hard. Okay, let's talk about this then. So you have all of these tools, right? You know the tools, right? You understand that it combines higher probability, higher time frame drawn liquidity, and lower time frame drawn liquidity, delivery, speed, displacement, and experience, and also SOUP, PD arrays, SMT, and context profile, but like this whole use system and model confuses me. So you have a framework, right? Top down, right? Let's talk about top down. The most important things in ICT versus like the lower ones, right? Number one, first important thing, draw on liquidity. Every single trade that you take, every single idea that you have in the market, every single thing that you think should have the foundation of draw on liquidity. Where is the market drawing towards, right? That is the foundation of our system, right? Is draw on liquidity. That is the foundation. Where is the market drawing towards? Is it buy side? Is it sell side? Is it an imbalance? What is it? Number two, in my opinion, is market maker models. Are we generating liquidity? Where are we in relationship to structure? What do I mean by that? Where are we in relationship to structure? Meaning, did we just take buy side? Did we build, for example, like if we were to look at this chart, right? And I can look at this and I'm like, if we were to go back here, I'm like, okay, you know, we just came up to took buy side, right? All of this is buy side of the curve. Okay, we just took out buy side. Let me zoom out a little bit. Okay, we just took out buy side, right? So buy side's taken. There's an SMT on the bigger time frame. I'm bearish, right? Bigger time frame SMT, but I'm not gonna just like, I can expect, and I'm looking at this, and I'm like, hey, I can already immediately tell that we're generating sell side liquidity. Low is here, low here, low here, and there's an imbalance here. Why does that also matter? Because what are the four reasons why markets move? Hunt liquidity and rebalance the inefficiencies, right? Those are two of them alone. So rebalancing the inefficiencies and hunting liquidity. So I'm like, okay, where are we in relationship to structure and market maker model? Well, my bigger time frame draw on liquidity is the daily fair value gap, right? I want to see that get taken. But right now, the market's not doing anything to really show me. So we're continuing right. There's no displacement through a swing low. There's no displacement. What are we doing here? Generating sell side liquidity. We have another manipulation leg. Oh my God, okay, are we gonna displace? Are we gonna displace? Are we gonna displace? Are we gonna displace? I'm waiting. Boom. Now we displace, right? High gets taken. And I can say, and now I can have a confident say, we go here, right? We had a change in the state of delivery. We generated sell side. We're continuing to generate sell side, and we now expect market maker sell model. So we know the draw liquidity, we know the sell model. Now what? We zoom in and we do the exact same thing over and over again. We zoom in and find and look for the exact same thing. Where's the internal draw? Hey, we're drawing here. Where could I expect to see price react, right? Well, look, if I was to zoom out, where do we react? Daily volume imbalance. Where is it? SMT. What's the draw? Low. I zoom in. Find the internal draw. Is the internal draw in relationship to the external draw? Right here, there really wasn't any. I would say this is it here. This being the internal draw in relationship to the external draw, right? This is a model in its own, right? This is a buy side of the curve, sell side of the curve model on its own. But this is also a model on its own, right? Two models. So now you're like, okay, I'm aligning and I'm looking for, number one, an area in which we're going to react to, fair value gaps. That's where soup comes into play. That's where other PD arrays comes into play, SMTs, blah, 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 blah. And then, of course, weekly profile and like other stuff like that. That more has to do with drawing liquidity and buys. And then you, of course, you can add other things like macros, looking for time-based liquidity, entering off of time as well. For me, system equals the mind state / attitude I've built. It's the rules I follow daily and disciplines I've created, the mental mechanisms I have in place to protect me from overtrading, risk management, position sizing, etc. Model equals the patterns I see in the market when the market is showing its hand to tell me where it's highly probable to go. You could say entry model. I apply my system to the entry model over and over and over again, 100%. Let's say we balance and see them equal highs that you just spoke about in your example. Is the draw on liquidity considered lower still, or is all of this generated buy side considered the trend is now up and the draw on liquidity is above? I get confused because I feel like on the sell side of curve, but still have room lower. If there's room lower, then buy side is not the draw unless buy side becomes the draw based off of price, right? Like for example, if in the overnight session we do something like this. Oh, actually, this is not where we are right now. Hold on. Right? Right now, the draw is still lower. Nothing gets in the way of that. Nothing gets in the way of that. We could do this. Right? We could do that. And then we have all these equal highs here. But these equal highs only become the draw on liquidity, number one, when sell side is taken, right? And number two, price shows us that's where we want to go. And that's where then this becomes a model on its own. This becomes then sell side of the curve. This becomes then buy side of the curve. And what are we looking for? The exact same thing on the bigger time frame, right? Which would be we're printing structure, right? We're blah, 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 manipulation, displacement, breaker, blah, 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 blah. And then we have something like this, right? But only when sell side is taken and we actually have structure, does that make sense? Does that make sense? Justin, do you have certain time frames for certain entries? Example, if we were testing a 4-hour fair value gap, would you want to see market structure shift on a 15S5? If we were testing a 15-minute gap, would you look on a 1 minute and lower? If I'm being completely honest with you, I do not have set time frames. I use my eyes, and I've become so fluent with fractal price where I look at whatever looks right. And that's just my explanation on it. If you want to set times, you can. Now, basically what you just said is correct. Like, obviously, if you're trading a 4-hour, you're not taking entries on a 1 minute, right? That's just not obvious, right? Like that's number one. As long as we know that, you're in a good position, right? If you're on a 15-minute and you have a bias, you're probably taking entries on a 5 to 1 minute, right? If you have a 1 hour and you're looking good, right? Again, this all keep in mind, when I say that, that means bigger time frame point of interest in which we're looking to reject. That's why we're zooming in the first place, is because we have a bigger time frame drawn liquidity. Let's say we're in a 1 hour fair value gap, and I'm now looking to zoom in into that 1 hour fair value gap to then look for a model, right? Displacement, manipulation, all these things to then recognize how we're drawing and when we're drawing there, right? So for me, there's really no set time frame. It's recognizing the model. That's what matters, because it could be different. You could be on a 1 hour and then see a 15-minute buy model in the fair value gap. You could be on the 1 hour and see a 5-minute buy model. It'll look the same way. It doesn't matter what time frame it's on. It'll look the exact same. Doesn't matter the time frame, because price is fractal. It'll still look the exact same on a 5-minute or a 1 minute. For example, even if I was on a 5-minute here, right? Even if I was on a 5-minute and I'm looking for buy side, right? Let's look at all of the times that I could have went short, right? Let's look at it. Let's say this. I'm looking at a 1 hour, right? Hey, we're in a daily volume imbalance with a daily SMT, right? 4 hour. This SMT doesn't mean 4 hour daily, whatever. It's going to show up on every fucking time frame, right? Let's look at this. Let's start on the 1 hour. Actually, let's zoom in. Okay, buy side gets taken, and I'm going to look at a 5-minute. Let's wait to see if there's ever manipulation and displacement this entire time. Again, I'm looking at this, all this generated sell side. We're in a daily volume imbalance, right? I'm looking for buy side. I'm looking for manipulation. I'm looking for displacement. Okay, hold on. I'm waiting. Was this manipulation? No, we're creating equal highs. What are we doing? Generating sell side liquidity. Would it make sense for us to just dump here? No, why? Because there's no generated sell side. This is just simply to rebalance price action. Where to? Equilibrium with this previous price leg. Actually, we didn't even tap it. Buy side gets taken here. Okay, buy side now gets taken. Manipulation. Is there displacement through a swing low? No. Low here. Scoop. Rebalance. Low here. Scoop. No displacement through anything. There's no short here. There's nothing. When you zoom out, you realize, hey, I'm actually looking at literally nothing. I'm just looking for something because I want to see it. Zoom out. There's literally nothing here. It's two fat up-down candles with no displacement through anything, and then everybody else just gets chopped up here. Okay, let's try it again. What are we doing? We are generating sell side. Everybody gets trapped up here and just gets chopped. Because what are we doing? We're generating buy side and sell side liquidity. So everybody gets chopped up before the manipulation leg because nobody's waiting for the actual fucking thing. We all know we're looking to sell, right? Or at least we all should know that we're looking to sell because we have a bigger time frame SMT. We're in a daily volume imbalance. We can tell that we want to sell all this generated sell side. Like, this is just the algorithm at work. Like, this is literally what it looks like. This is the algorithm at work. We're generating all of this sell side liquidity. We're setting up for a manipulation. Thursday weekly profile aligns to be weekly high. There's no displacement yet until manipulation on this leg. It lines up perfectly to the exact fucking midpoint of standard deviation, because the manipulation leg will do that based off of where we are projected. All of this generates sell side. It lines up perfectly with where we expect price to go. And this is the first time in this entire run to the upside that we actually had displacement. But now you can see it more clearly. But in the moment, you're like, I thought there was a lot more displacement. What the hell? But this makes sense because there's manipulation at the high, buy side, then displacement, and there's a reason for price to go lower. This is the reason why a lot of traders fail, is because they're not looking at the reason for price to go lower. What's the reason? Look at all of this generated sell side. What's the reason for price to go lower here? It's just one big imbalance. Well, Justin, look at this generated sell side. You're in a massive imbalance, sir. There's nothing here yet. There's no manipulation here. We just come back, generate sell side, and you get chopped up. And there's no news either on Monday, Tuesday, Wednesday. Or on Wednesday there is, but on Monday, Tuesday, there's no news. And then we have manipulation, and then we get displacement, and then we pull back to a 5-minute, and time and price aligns. Time and price aligns with weekly profile, time and price aligns with the model, and time and price aligns with when exactly we're supposed to go. Make sense? How the fuck did you learn this? Thousands of hours of watching price action. And going through all the mistakes that you guys are going through right now. And sometimes I still struggle with it. And that's fine. You just got to recognize it and move on from it. It's like we all make mistakes. Learn it. You know what you're doing wrong. Fix it. I'm here to tell you as well, because I've made these mistakes plenty of fucking times. Sometimes I still do. You see it, you recognize it, you fix it. And you got to, and most importantly, zoom the fuck out. And I'm not saying zoom out in your charts. I'm saying zoom out in your fucking journey. We get so focused on one day, 1 week, one everything. Zoom out. Alrighty, guys. That is all I have for you guys tonight. Really great session. I will post this up. Honestly, I might post this. I haven't posted a charting session on YouTube in a while, so I might give this one out to the masses to get to do my weekly giving. But hopefully everybody enjoyed their night, enjoyed their day. Enjoy the rest of your night. Get some stuff done. Enjoy everything. Take some time off. Go read. Go meditate. Go do all the good things. Go spend time with family. I will see you all tomorrow morning. Peace out, guys.